Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Joe Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management.
Days and Fridays, we're with you from 2 to 4. Be sure to check in. You can listen to us a couple different ways. One is on your radio at KDOW 1220 AM. You could also listen to us live online if you go to KDOW.biz. We're a live show. We love your calls. If you have any questions for me or my guest as we get started, the number is always the same, 1-800-516-1220. We also have a live text line. That's been a popular way to communicate lately if you want to text during the show. Any of your questions, 408-838-9060. Most of you know that for almost 4 years now, the focus of the show has been education and information, helping you, the consumer, do that by passing on, having great guests like I have today, content, information. The idea is help you, the consumer, make wise financial decisions with your real estate, period, in general, whether it's buying, selling, financing, building, designing, and we really try to cover all the areas, anything and everything real estate. With that, let me invite my guest in today, CEO of Real Wealth Network. Let me welcome Kathy Fettke. Kathy, how are you doing today?
Wonderful. So glad to be here, back on this wonderful station.
That's right. You were on this station. How long were you with KDOW here? You had your show that was extremely successful until you moved to Southern California. How long were you on the show here?
Oh, I don't know exactly, but it was probably a couple of years, and then so glad to be back.
A lot of great information. So Kathy, real quickly, has done it all in real estate, and really excited to have her on today because if she's a wealth of knowledge, really covers all aspects of real estate, whether it's tax, protecting assets through LLCs, self-directed IRAs, 1031 exchanges. She has done it all in real estate, and really one of the people that have started this trend many years ago and have been teaching and educating people as well. And that's one of the things that I'm very excited about having Kathy on today. Kathy, maybe you get started and just tell the listeners a little bit about your background and what you're up to now.
Sure. Well, I was born and raised in the Bay Area, actually in Menlo Park. That was kind of high tech, so it was kind of a normal place back then.
Yeah.
I think my dad bought a single family home in Atherton for $99,000 when I was 8, and 10 years later Apple was born, I think that house was worth $1 million. So I've seen real estate in the Bay Area just do amazing things. And, so back about 10 years ago, we had the opportunity to buy in Lafayette, another area that really just kind of had low prices. We bought a house for $500,000 in 97, and then 10 years later, that house was worth 1.8. But the big question people have is that going to continue? Right? Can we hope for that kind of appreciation in California?
Right. No, it is really, and so with a background like that, you've certainly seen it all. How do you? Maybe you could share with us first a little bit about the success in terms of weathering these different ups and downs, as we're going to talk about the housing bubble in the market, potentially if there is one and all that. But before we do that, what would you say the key to your success has been? Because you've seen a lot, you've seen the ups, the downs. Kind of overall, what would be your perspective and how to stay in this crazy business and still, try to maintain your sanity and do well at the same time?
Well, I think the key, really, after all the years I've been in real estate, is understanding market cycles and knowing that what goes up does come down, and it does it every 10 years, and every 10 years people get amnesia and forget. And so having been born and raised in the Bay Area, I've seen and lived through many of these cycles. I wasn't actively involved, but I watched my dad make money, and I watched him lose money. And so, people will often say the three most important things, about real estate is location, 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 right? And that's true. Location's important, but probably more important is market cycles, because let me give you an example. One property in Stockton, California that a client of mine had was actually, she had 3 in Stockton. They were worth $420,000 each. In 2007, she sold them because we knew there was a bubble. And we helped her exchange them tax deferred. She exchanged those 3 properties, and they were in a bad part of Stockton, and they were dilapidated old properties. But she still sold them for $420,000. We took her to Texas that was at the beginning of its boom cycle. So she sold at the peak in California, exchanged and bought in Texas, just at the beginning of their boom. She was able to buy 10 properties from the 3 that she had sold. Wow. And each one of those rented for the same that the other 3 did. So she basically quadrupled her monthly income and saved her net worth, because those properties in Stockton that she sold for $420,000 were worth about $100,000 just a few years later. Same property.
Yeah, I was just going to.
Different market cycle, right?
Yeah. So I was just going to say that was a great example of kind of the cycles and timing and staying really in tune to what could happen, what's going to happen eventually, one way or another in real estate. That's a great example. Thank you for that. So that being said, we talked about this huge run-up, and you know what's going on here in the Bay Area and, Southern California to a certain extent. But here it's just crazy because of all the different dynamics that you know of. I mean, you've lived here, beautiful weather, unbelievably strong business job market. Then you have high tech, and you have the all the venture capital, and of course we're surrounded by all these wonderful cities and places you go, by the way, and the weather is incredible. So is there, in general, I guess maybe we could take outward first, Kathy, if you give us kind of an idea, is there a housing kind of in the market? Is there going to be, do you see a bubble kind of throughout the United States or certain areas, or how would you view the U.S. housing market right now?
Absolutely. There are areas that got hit really hard by the foreclosure crisis and then kind of bounced back and overcorrected. So it's been a pendulum swing, in some markets. And then there's other markets that have really remained stable. And for a lot of our members at Real Wealth Network, we're teaching them, the difference between stable markets where you can get really high cash flow and not worry about things. And then there's markets where if you time it right, you can do really well. If you time it wrong, you can lose everything. It's like it's a difference between day trading and and bonds or whatever. You could make money if you gamble, and you can lose money, or you can just play safe. So there are some markets where there's tremendous job growth. The economy is growing. Some cities are investing in themselves. There's population growth. And they're just at the beginning of their boom cycle. And those are fantastic markets for real estate investors. But there's other places that have never boomed like they have. They're more expensive than they've ever been in their history. And yet people don't understand that the fundamentals aren't there anymore. So I just told you that 10 years ago we advised this woman to sell her Stockton property at the peak of California's bubble market back then and buy in Texas when prices were down. But 10 years later, prices in Texas aren't down anymore. Parts of Texas are more expensive than they've ever been, yet people are relying on old, outdated information thinking, that it's still good buy. It's dangerous. Same with Atlanta. It's overpriced, overvalued right now, but California investors are diving in now, too late.
Would you, one of the things I think, and you've seen it here, Kathy, too, is I hear it a lot, get callers, emails, information. So many people interested in real estate, investment in real estate, but they've only lived here or they're only familiar with the Bay Area, and they think, oh, my God, this is ridiculous. I could never do this. But so maybe you could speak to the fact that of your experience and, people to think out of the box a little bit and this is not the only place to invest. Matter of fact, there's many other different places if you're open-minded and if you really get connected with the right organizations and companies and like yourself. Talk for a minute or so about the opportunity outside of the Bay Area that people may not understand about.
Sure. I'll give you, the best thing is a story, right? It helps people understand. I had a woman who heard me on KSFO, and she said, I just inherited this house in San Francisco. It's kind of a tear down. I can't really rent it. I can't afford to fix it. So I think I'm just going to sell it as is. And I'd like to exchange it, tax deferred, in a 1031 exchange to somewhere where I can cash flow and retire. And so we said, yeah, absolutely, put this thing on the market. And our broker opinion was it was worth about $800,000. I mean, it was literally a tear down, but hey, a tear down in San Francisco is going to be about $800,000. So she puts it on the market for 1.2 just to see, and she got a 1.5 all cash offer. Can you believe that? Close in 10 days.
Oh,
so,
boy.
Yeah. So she, this is a seller's market. It's a wonderful time to sell. Not a great time to buy unless you're very particular and know what to look for. So she took that $1.5 million and we showed her different markets in the U.S. that are just at the beginning of their boom cycle. So she exchanged that one San Francisco property and we helped her buy 20 cash flow properties, brand new, with, excellent property management in place. She bought them in Indianapolis, which is really a city that's rebirthing itself. She bought in Jacksonville, Florida, where they just haven't had their recovery yet because they're a judicial state. And then she bought some in Houston before it kind of got overvalued, which is the case now. And she and her husband are now cash flowing about $18,000 a month. And, of course, she has been able to retire. He's still working because they still want to get more loans. They want to buy more property.
There you go.
I mean, that's just an example. Like, she could not, if she had exchanged for something in the Bay Area, she wouldn't. Right. She'd maybe get $3,000 or $4,000 a month, not $18,000. Not be in a position where she's done. She's out of the rat race.
No, well said. Well, before we take our first break, again, I'm talking to Kathy Fettke. She is the CEO of Real Wealth Network. So just to set the stage a little bit, too, if you have any questions for Kathy. So Kathy helps people invest in properties, but also more of the training, learning. She teaches about trusts, self-directed IRAs, 1031 exchange. There's so much to investment real estate. It's more than just looking out for a home and then buying one. There's a lot to it, tax advantages, trusts, how to protect your assets, all kinds of different issues like that. If you have any questions for Kathy, two ways to reach her, 1-800-516-1220, or the text line, 408-838. Time with us, Joe Cucchiara with Real Estate Radio Live. I have on the phone for the entire hour, who's kind enough to spend some time with us, Kathy Fettke. She's the CEO of Real Wealth Network. Her and her team helps people invest in real estate here and all over the United States. She'll also help you planning the process, and there's so much to investment real estate, and how do you protect the taxes, and how do you take transfer money and you keep building that wealth and preserve that wealth, and there's so much to it. She has helped people do this for several years, actually many, many years. If you have any questions for Kathy, I have her on the line, or I should say today, 1-800-516-1220. Call us on the toll-free, or you could text 408-838-9060. I think there's at least one text, and I'll get that get that question to Kathy in just a couple of moments. What about interest rates, Kathy? I mean, we've been hearing about, this is my business. We track this all the time. Rates have been so low for so long. We've kind of in this period like this big party's been going on for a long time. The rates will go up. They're going to go up most likely. Who knows? By the end of the year, the Fed will probably finally make some adjustment with the prime, and eventually that could have effect on the mortgage rates. But what's your opinion on that? Is it kind of baked in already, or are people prepared for this? It's been so long, and is it really going to make a difference in real estate if rates go up 0.25% to 0.5%?
Well, they keep threatening that they're going to raise rates, and they're not. So that's interesting, and it does give us a little bit of a sign that maybe the economy is not plugging along as strong as they say, or as they're trying to tell us. But with that said, interest rates don't tend to have a huge impact. I should say increases have not historically had a huge impact on real estate values. Everybody thinks that, wow, once interest rates go up, people will be priced out and there's going to be a huge impact. But historically, the opposite has been. Interest rates rise, home prices have risen as well. And when you look a little further into it, you see, well, the reason the Fed raises interest rates is because the economy is booming, and when the economy is booming, people are working.
Nope. We may have lost Kathy, so we'll try to get her back if we can. She was just talking about I'd asked Kathy about interest rates. In the meantime, we'll try to get her back. But so the question to Kathy was about interest rates, and she was explaining that, and I would agree with her that historically, interest rates going up a little bit haven't had a huge effect on the values, increase in values and appreciation in real estate. And with rates going up, yeah, it certainly affects. I think who it affects most, and when we get Kathy back, we'll ask her about this too, and that is certainly first-time home buyers, someone that's just trying to break the barrier and get into the market of buying a home. If there's a difference, a half of it, interest or half of a percentage of interest rate, if it goes from 4% to 4.5%, for instance, depending on your loan amount, it could mean several $100s for a person, and that could be the difference of whether they qualify or not, for sure. There's no doubt about that, and that's going to happen. So my take is that, rates come up a little bit, and they will come up a little bit. Certainly will cause a little bit of pause for some people. For those that are first-time home buyers, I think it'll have the most effect on them. However, the first-time home buyers profile has changed, certainly in the Bay Area here, too. I see a lot of first-time home buyers now that have 20% down, that have really good incomes, where before the typical kind of first-time home buyer was someone scraping together to put 5 to 10% down, and they had to do an FHA or they had to get their parents to help qualify. There was a number of different things that had to take place for someone to get their first property. So that dynamic certainly has changed for sure. And so when we get Kathy back, the other question I'm going to talk to her a little bit about is cash flow properties in California. We had talked a little bit about in the earlier segment. I asked Kathy about the Bay Area specifically, and she did allude to the fact that she helps a lot of her clients buy properties outside of California. So if we do get her back on, I want to ask her a little bit about that, because I think there's a lot of interest buying properties in Texas, buying properties outside of the Bay Area and certain other areas in the United States that have some growth patterns going on. So my take is this, and one of the things on real estate is that when you look at the population growth, just the average population growth, and then you look at the income levels, there's no doubt there's a huge separation between the middle class, unfortunately, is deteriorating. You have this, you have large wealth, and then you have this middle class that is really deteriorating. So the middle class is really being divided up two types of people. Are the middle class stepping up, and now are they becoming more wealthy, or are the middle class, or a portion of them, falling backwards, unfortunately, and becoming really in a level that is, less than middle class, and which really, you hate to categorize anybody, but you do this to try to get statistics and data on how we make some decisions and how wealth is distributed. And this is what's happening. The middle class is kind of deteriorating, and what is that going to do, to the economy, to the housing markets, to a lot of different... If you're in an area where there's a lot of wealth, you don't see this. But if you're in a historical area that is blue-collar, you do see some of this. So we're going to continue to talk about this. We're going to take a break. When we come back, I think we'll have Kathy back on the line. We'll reconnect with Kathy Fettke. If you have any questions for me or Kathy about investing, 1-800-516-1220. This is Joe for a few minutes, and she is if you're just checking in, she is the CEO of Real Wealth Network, helps people's tax strategies, real estate investing, protecting assets, teaches those investors, self-directed IRAs, 1031 exchange, a lot of different ways. And there's a lot to investing in real estate and doing it smart, just like anything. But this is I would suggest that if anybody's out there and maybe you're just kind of testing your waters and you're thinking, boy, I'd like to invest in real estate, where should I start? One of the questions I hear all the time is, gosh, I'd like to invest in real estate, but it just seems to be unlikely here in the Bay Area because I have to put so much down, and is it really, how could I ever expect cash flow, et cetera, et cetera. So where you have Kathy on the line, and Kathy, speaking of cash flow and opportunities, and that question I get asked a lot, and I'm sure you probably hear it too. I'm in the Bay Area. All I know is the Bay Area.
Yeah.
Love it here, have my primary residence or something, but I'm looking to invest in real estate, but I'm a little concerned, not sure I could get any kind of cash flow, and I'm not sure that it makes sense. Is this the type of thing someone would call you or meet with you or your team, and you guys would sit down and really kind of, put together a roadmap of some of their options and how to create some success in real estate?
You got it. There's just really nothing more exciting. Well, I don't know about that. There might be something more exciting, but I get very, very grateful when I see somebody's eyeballs pop because they see for the first time options. And one example might be there's so many people in the San Francisco Bay Area who cannot afford to own property. They just simply can't even get their own primary residence. And then when I show them that they can qualify for a loan on an investment property for what would be a car payment, and they just can't believe that they can get into the real estate game that way. And so let's say that they were going to buy a rental property in the Bay Area for $500,000. They'd have to put $125,000 down.
Right.
They might not have that, but I can show them how they can buy a property free and clear for $125,000 and probably get the same amount of cash flow they'd get on the $500,000 one. I mean, rental income. So,
Yeah. Go ahead.
Go ahead.
I think there's that, and one of the things that I hope you're putting people's minds to ease a little bit is that it's that, a lot of people have heard over the years, which is kind of that old wives' tale, like, oh, gee, if you can't drive to a home you own, or if it's not within 2 hours, there's all kinds of this craziness. And maybe that was the way it was years ago, but with networks and organizations like yours that, that understand buying and selling and investing in real estate all over the place, that's a difference now than it is 20, 30, 40 years ago, isn't it? I mean, you have professionals like yourself that could walk someone through and do a turnkey program, and really it doesn't matter where that property is.
Yeah, I mean, when my dad was investing, I don't know how he could have even pulled it off to invest anywhere outside the Bay Area. So he was in Marin. I mean, we lived in Atherton, but he invested in Marin at the time, and it's not like that was that close. He never went to visit his property.
Yeah.
But they didn't have the internet then, and it wasn't so easy to find out what was going on on your property, and you didn't have Google Earth that you could go and take a look at your property from outer space, I mean, so there's so much more available. You've got nonstop flights. You can be at your property if it's in Dallas in 3 hours, and you can have your property manager take real-time photos and text them to you. Again, that just didn't happen back then. So it is a very different world. And so, if you're to buy a $100,000 property in a really good A-class neighborhood in an area where there's job growth and you knew you had property management in place and all you had to put down was $20,000, instead of buying that $500,000 property in the Bay Area for $120,000, you could actually buy 4 or 5 of these cash flow properties, and you could qualify because you get to include the rental income.
Yeah.
So
that's right.
that is just so exciting to see somebody go from being a non-property owner, and just feel like they're losing out, to all of a sudden, now they have a whole portfolio, and you should see their whole energy changes. They feel so powerful. They feel so successful. It's awesome.
All right. Well, that is well said. And that's perfect time. We're going to take another quick break. When we come back, you heard it. There's a lot of excitement in real estate, and there's ways to do it with investing less than you would think. 1-800-51. Welcome back in. Thank you again for joining us this afternoon. We have Kathy Fettke on the line. She is the CEO of Real Wealth Network, helping people invest in properties all over the place. And also, what I love about what Kathy does is the education and information process. In other words, she works with clients, her and her team, to help you become a real investor and a smart investor and a wise investor, and where you can move that cash, and where's the best place to exchange those, and when you move up or different. There's so much to real estate investing, and now that the world has changed and we are really in a information technology driven economy, there is all kinds of opportunities. We'll bring Kathy, and Kathy, you're still here, right?
I am. Amazing.
All right. Maybe you know what it is? I think the Bay Area has seen rain. It's been so long since we've seen rain. Maybe the phone lines don't know how to handle.
Plus it's Mercury retrograde, The stars are not aligned.
That's true. Well, let's, if we get the caller back, Andy, if it's out there, if that's who was calling or whoever, give us a call back. Alan, I'm sorry, 1-800-516-1220, Alan, if you'd like to call back. In the meantime, Kathy, tell us a little bit about, there's a project you're working on or involved in near in Mountain View near the Google headquarters.
Yeah, this is pretty exciting. And what I tell people who come to us and want to buy and hold rental property in the Bay Area, the bottom line is you're not going to get cash flow. You're not going to get a very big return. So what you do get is the hope of appreciation. And that may just be hope because we don't know if we're at the peak of the market. So if you're going to buy property and you want to be in the Bay Area and you want to be in California, you have to take a different approach, one that isn't just straight rental property, because you can do so much better elsewhere. So in this project and locally, we work with developers who are able to find these infill land projects where we can go in and rebuild. Because more than anything, what's needed in the Bay Area is actually more housing, right? I mean, there's just a real shortage of housing. There's so much job growth. So we have done some amazing real estate deals where together as a group at Real Wealth Network, people each put in, they buy a share and we buy these projects together, fix them up and sell for huge profits. So literally just yesterday, one of our, it's called a syndication. It's a group investment. We bought this land. We bought a commercial building in Dublin, California, right next to the new BART station, right where the city of Dublin wants its new downtown. Yeah. And, and we thought we were, we bought it. We were going to tear it down, just create lots for builders to buy. We thought we were going to get an offer for $14 million. Well, with the market the way it is, we got 4 offers. We got 20 offers, but 4 of them at $20 million. So we took one of those, and that just closed out on yesterday. And so those investors,
congratulations!
Thank you. And they want their money in something. They want to do it again. So that same developer found an apartment right just walking distance from Google, from LinkedIn, right there in Mountain View. It's an apartment that's doing fine, however, it doesn't cash flow. So we're buying this apartment and we're getting 2% return. The cap rate is, it's not negative. Most of California properties are negative, so at least it's positive cash flow. But we're not buying it for the 2% return. What we're going to do is the city of Mountain View recognizes the need for more housing. This is actually a really large piece of property. It's low-rise, and so the city wants us to, make it higher density. So we are doing the same thing we did in Dublin, where we are redeveloping. Well, right now we're just rezoning it. That's all we have to do is rezone it and re-entitle it for higher density, which the city wants. And we're going to be in and out in 18 months, and investors are going to do pretty well on that one. So we're actually presenting that with the developer on this Saturday in San Mateo. If anybody's interested, they can just go sign up at our website, realwealthnetwork.com.
Yeah, that's great. And we're going to, this is, as you could tell, if you're out there listening and you're interested in investing in real estate, this is the lady you need to speak to. She has a lot of success. More important than success, and of course that's always a key factor, believe me, but is understanding markets and understanding timing and understanding what's going on with different marketplaces. And Kathy and her team have done this for a long time. So, and we'll give it out towards the end again, Kathy, but if anybody wants more information about that project or anything else that you do or how they might be able to, you might be able to help them, what's the best way to contact you?
Yeah, absolutely. Well, Real Wealth Network, that's real like real estate, wealth like your money, and network as in the experts that we work with that bring us these deals and that, have 30 plus years experience. We want to work with people who've been through market cycles and know how to time it as well. So realwealthnetwork.com. You can join as a member. It's free. And then you'll get access to our upcoming events, because on deals like this, there's really strict security laws, and we can only include people and investments like that we know. You have to have a prior relationship. So if you come to the event and get to know you, you might have a chance to participate in these kinds of things. But on other other deals where we're showing you markets, like at the end of October, we're going to show you a brand new market, one that Warren Buffett is in heavily. And, and we've got like lease option properties there that cash flow beautifully because the lease optionee, the person living there, pays for all repairs. So it's that's going to be a great deal too. Wonderful.
So are you able to give away some of your secrets today, or do they have to, in other words, when I say secrets, where are you and your team, what are you looking at? What areas interest you, or as we sit here today outside of California, inside of California, what interests you, and what areas are you guys focused on?
Sure. Well, if I'm going to be investing in California, it's going to be redevelopment. Like I said, we're doing this Shasta Wine Village. We're buying apartments and redeveloping them and stuff like that. So I do like doing that in California with developers. But as far as individual investments and buy and hold, I want to be in areas that have not bounced back yet, that have not boomed. And so right now, if you wanted to turn back the clock and say, hey, I wish I could buy some foreclosures back in 2009, you can actually do that in certain markets in the U.S. that are called judicial states. Yeah, they're judicial states, which means all foreclosures have to go through the court system and through a judge. And because there's not enough judges, there's just a huge backlog. So there's a handful of metros that it's just like going back to 2009, and yet there's job growth and population growth and city redevelopment, but you can get properties for half of what they were and what they should be, get great cash flow now, and get the potential for appreciation. So that's what I love, cash flow and appreciation, because cash flow straight, it's okay, but it's a 10% return maybe. But if you add the appreciation on there, you're going to be getting double-digit returns, and that's when it gets fun.
Good stuff. All right, we're going to take our last break. When we come back, we're going to continue our conversation, finish up with Kathy Fettke. Now's the time, real quick, if you have a couple more minutes.
RadioLive.com. Tune in, log in, download our podcast. Discover more at RERadiolive.com. RERadiolive.com.